I think Alex Fernandez even said, "Oh yeah, for a little scalp, dude." I I
Oh
mean,
man.
I mean, quite a nice move, right? So that's a
Yes.
liquidity grab down below 786. I mean, 2% move, easy, easy, easy money. So yeah, that I mean, if you're able to identify, I would say like reversal patterns, okay? And I always say this to you guys, go through your charts and mark out everywhere where you want to go long and green. Okay, go mark out where you want to go long and study it. Study it. Look at it. Look at what you're looking for. Okay. And then go through your charts and mark everywhere where you want to go short. And Alt V, right? Alt V, very easy. And mark it out in red and go and study it. Okay. Go and study it. And you will learn so much about yourself, about what you're looking for, but you can't do it unless you spend the time to learn. Okay, so right now long off of VWAP right here, coming into this key area, looking for a continuation. Still long right now, looking for this thing to continue up. So what happened this morning? I can go into it a little bit. I took two longs this morning, quite easy. Okay, quite easy. Everybody this morning wanting to long the bearish divergence. I said, don't long, please don't long. I I I beg you not to go long. A whole bunch of people in my chat said that they went long this morning up here because this is the 1 minute time frame. You go on to something like even a 15-minute time frame. Look at the FOMO, man. Look at this. You wake up in the morning. Oh yeah, look at this. Let's buy green candles, right? Everybody wants to buy the green candles, right? Bad idea. Bad idea. You got a breakout continuation. Unless you got long, like here or here or here, you should not be buying the top. This is literally buying the top. So this morning, I told everybody in the live stream, I said, do not buy here. This is bearish divergence at the top. Typically, a bear div comes back and it revisits minimum where the bear div started. So if the bear div, you can see here, started here, put a vertical line. So it's minimum coming back down to these lows. That's typically a rule for me. Like that's where if I'm taking this trade, I'm targeting the lows. I'll have TP1, TP2. Very simple. Keeping it very simple. So what happened? Bear div wrecking everybody and their brother and sisters who are buying the top. Okay, we don't do that here. And if you don't want to do that, if you did do that, that's okay. You can come to the live stream and I'll say, hey man, don't buy this. However, I got long at 91 120, so I got long right here, and I got out right here. Then I ended my stream. I looked at VWAP. So if I go over here, my chart prime scalp here. This was the long that I gave when I left the stream. I said, this is where I'm looking for the long. And if you pull up VWAP, you can see VWAP coming back in here. We had clear support here. Uptrend has started. I was looking for the retest back into this area within here. It did come in here, and now I'm currently long up into this area here. Okay, I have hit TP1 at the highs here, and now I'm just chilling. I'm just chilling. So that's kind of where I'm at. I've had a very, very nice trading day already. Uh, I bought my grandma a brand new TV yesterday. It just got delivered. 65 inches of pure power. It's fucking huge. Um, but
Holy shit.
I've made more. I've made 5 of those TVs today just trading. So that's the thing, right? She's like, why you buy? They're old. You want to get them gifts. She's like, man, I never thought we would see something like this in the 70s because they're almost 90, right? So imagine 65-inch flat screen TV, right? They're like, oh,
And you
their
get a
faces.
point.
It's so priceless, man.
And you get a point because
Right?
guys, you need to remember that our grandparents got the first or second generation of TV, right?
Yeah, man.
So,
They had the one that with the knob. Remember that?
oh man, I love them so
Gear.
much. Yes.
And then you got the ears, the bunny ears. Oh man, it's the way, man.
Oh
Yeah.
man, yeah.
Yeah, man, that's the one. I was the remote. Yeah. So I mean, I was setting it up before the live stream, but my grandma's there. Oh, she's like, I could watch the TV from the neighbor's house because it's so big, right? Oh man. But yeah, right now, consolidation. This is just for me right now, like this is just really either we're popping or not, right? We're gonna break out or not. But the thing is, it's trapping traders constantly. So you gotta be if you are getting long up in these areas here, you gotta be cheap. Like you gotta be here because look at how fast they'll rug you. Okay, look at just go back and look at it. Right, any of this trading here, they get to the top, they rug you. You get to the top, they rug you. One of these are gonna go. I do believe that. We might see lower first, but one of these might go. Okay. And that will be a lot of money to be made. You want to get into these down here, in my opinion. Or if you are going too long the top, you gotta be so damn cheap it's not even funny. Okay, maybe a half a position, right? Risking whatever. $50 to make upwards of whatever. You get in on that and it rips to 97,000. It rips to all-time highs and beyond. You might catch a beautiful trade, but it's you got to be cheap and you got to be prepared for that. Cuz in my opinion, if I'm looking at the higher time frames, we need to come to 85,000. And that's just my opinion. Okay? Just looking at this, looking at what price action's doing, coiling up. I mean, my grandma can draw this triangle. Okay? Buying up, buying up. Typically, this is coiling up and it's going to break out. Everybody knows this. You can be in trading for a week and you know this pattern. This to me is probably the greatest opportunity the market maker has to build up longs in here. You notice how it hasn't come back down for any of this. So these guys are sitting, oh man, this is going to break out to build up longs in here and absolutely tank it, then to move up. That's my idea. And that's the pullback we want to see. Because if Bitcoin pulls back, whatever this is, 10%, 7%, that will be our buying opportunity if we get it. If we break out, sometimes the bull market it doesn't want to. If you back test any bull market, it doesn't give you that chance. Okay, that will be a chance. Sometimes it just goes right. This has been what 8 days of consolidation. Monday, yeah, Monday, Monday to Monday, Tuesday. So yeah, 8 days. 8 days of consolidation. People are getting antsy. Let's not be those people. Let's be prepared. Let's make sure that we are using good risk management, not just buying the top of the highest price Bitcoin's ever been, ever. Okay, let's be patient. And that's my words of non financial advice.
Nice. Oh, love it. 1 minute here. I want to take over really quick here, but before I take over, I just want to say something. Oh, very first, trade tuition. Welcome to the house. How is it, brother? How is your trading day?
What's going on, guys? Doing good, doing good. I do have a question when y'all get a chance to it in reference to divergence. Like, how do you know where it might go? Again, nobody knows like for sure to the exact dot, but like more, if you have stronger bearish divergence versus like, is there such a thing as stronger bearish divergence, weaker bearish divergence? How far do you think it'll go? Does it determine like the time frames or the amount of divergence? I'd like to know y'all's opinion on that.
Perfect. I do have an answer for that. Again, as you mentioned, it is not an exact science, but there is a way to look at how or get a little bit more out of the divergence. And funny that you asked this because I do see a couple of divergence, especially right now on the 4 hour. So let's take a look at what I got in here. So let me go to a cleaner chart. There. Well, that's not that's not cleaner. Oh, come on. myself, you need to start cleaning your disaster, right? Let's just clear this up, right? Also, let's just get rid of this. So we have
My
a
God.
divergence. Oh, come on, Alex. I've seen your drawings
What do you
too.
think his what do you think his room looks like? No.
No, man. To be honest, my whole house right now, it's upside down, because like I have. That's another talk for another thing. Like how do you call it? OCD. Like, oh, short. I mean,
Yes.
I bought something, but to get that thing into the kitchen, I need to organize the kitchen. But before I organize the kitchen, just to take that one, I need to organize it. Shit. I mean, shit's getting real around here. But yeah, it is a freaking mess if you want to know. All right, talking about divergences, yes, we do have a couple of different divergences. We have regular divergences and hidden divergences. This is not for a fact because in the future it might change, but for a very, very long time, usually normal divergences react usually to manipulation, not always to manipulation, but for example, also to fundamentals. But I mean, there's a blur line between a fundamental and a manipulation. Let me give you an example for that. For example, what if the US government wants the price of whatever it goes up, right? Not Bitcoin itself. Maybe their price or their economy to look stronger, right? They usually go and, I mean, change the rates, right? Or mess with the job numbers, right? Usually that is a fundamental that makes the markets react. They know they have the power to change or lead the narrative, right, for those fundamentals. And would that count? I mean, honest question here. Would that count as manipulation of the markets? I mean, when who makes the rules is also playing with them, I don't know. I see the referee trying to push a goal right on a soccer game. So that's kind of like a my thing there. So guys, would you say that would that be a manipulation of the markets? No, no one. Yeah, I also think so. Alex, trade division. What do you guys think? Very quick before, so I continue.
I agree.
Nice. All right.
Sounds good to
So
me.
all right. So the thing is that fundamental manipulation usually, or sorry, normal divergences react to either fundamentals or manipulation because of that blur line that we have right there, right? So that spectrum. Then hidden divergences usually react to normal market reactions, right? For example, when we have a big push, like in this case, right? We have a big push. We usually expect at least, right, or somewhere around one third to one half of the retracement, right? So basically, if we take a look at how we measure those movements, like for example, from here to here, and if we clone this, let's just come on, clone it, one, two, and clone it, and three. And I mean, of course, it's not perfect, but as you can see, very close to one third of that movement, right? So when we have a bigger movements, we are expecting one third to half or 50% retracement, right? That is a normal market movement. Why? Because of FOMO, right? So those kind of movements in the market are usually related to hidden divergences. Why? Because they are not as reactive and they're not as explosive, right? So I would say, is there stronger divergence than other? Yes, I would say it, and I would say the hidden divergences are less strong, right, but more natural than normal divergences, classical divergences. So then, answering to that question, that's the first part. The second part is how you predict the direction or how far could it go. Well, then I just give you kind of like a little hint. Usually, when we're looking for for hidden divergence, we're looking at movements that are around one half to one third of the movement, right? When they prolong, there's another kind of added divergence, which I wouldn't be saying that it's a kind stronger, but it's kind of like a subdivision that adds the possibilities because of manipulation. So it is like how big would a shake it bottle of soda will explode, right? Well, it depends on how much you shake it, but you're not changing the soda. Does that make sense? So that will be multiple divergence. So multiple divergence can be made out of classical divergence or hidden divergences. But the addition on them kind of like builds up that pressure. We can look at that build up pressure in the clouds here. Like, for example, when we see the clouds being compressed, we can be assuming that we have more pressure. Usually, that pressure it is because of that divergence, right? They feed each other because of the way that our oscillator is created. And as you can see, almost in every single point where we have cloud compression, we have divergences. Cloud compression, we have divergences. Cloud compression, we have divergences, right? Cloud compression, and so on and so forth. I mean, I could go the whole day here and keep showing that, right? So then how do you calculate how far will the movement go? I usually go for every single multiple divergence, I'll add a third. So I usually estimate a one single divergence to move a third to the way down, and then another one, a second, well, a 50%, and then another, let's just say another quarter, if we might, right? Why did I went from thirds to quarters? I think it's a little bit easier to picture because remember where the first thing that we talked about. First, the retracement is between a one third to a 50%, which is one half, right? Therefore, multiples of half are equals to quarters, right? Two quarters. Therefore, we are oscillating from thirds to quarters, if that makes sense. So what would be the next one from one third? One half. What would be the next one from one half? I would say two thirds, right? Or something along the way. I call those stacking divergences. Yeah, exactly. Stacking divergences, which are also multiple divergences, right? So they stock each other, right? And adding volume, or not volume, but that buying pressure is selling pressure. So let's just say one, two, three. Usually I will be looking for, what is it, the third one? Well, maybe three quarters of the movement, right? Something around those areas. And then just confluence. Basically, if you don't want to learn anything of this, I would say just go for the confluence point, right? So at this point, where we have, for example, all of our reactors and support resistances, right here, based on the movement that we have in here, I mean, we can divide that in what this is half of it, right? Maybe quarters. So that will be another half of it. So right now we're going for three quarters of the way, right? Do you see that? And that's exactly what I explained. So at this point, when we're seeing this big area of support and we have that many divergences, that's where we're expecting to go. But there's also one very, very important factor here, which is correction over time, right? Right now, we're talking about correction over price action, right? But I mean, we all know in the literature that when the price ranges up or ranges slightly down, we're also correcting, right? So what happens instead of going up, we stop in here and then we do a Wyckoff pattern here. And I'm connecting this to yesterday's class where we were talking about Wyckoff, and I'm gonna touch back into it. But at this point, when I start seeing Wyckoff pattern playing out, I'll be just ruling out a quarter at a time, right? So the farther that we go, I'm gonna be ruling out that quarter at a time, and I'm gonna be looking at my dynamic reactor. So there is a point in which we could be keep oscillating and then leave dynamic reactor to come in here. And the only point I'll be looking for it is a sweep of the lows, as Alex would say, right? So basically just a spring on Wyckoff. So trading tuition, did I answer satisfactory your question?
Yeah, I'm more of a second grader. That was like calculus in the like
Yeah.
highest degree.
Sorry.
Uh, you guys are like crazy
Sorry.
smart. Oh my god. Everybody in
No,
here
but
is so freaking lucky. Yeah, for me, it's like super crazy simple. It's like after I finish, I say Google Gaga. Like that's how basic my stuff is. Nice. I love it.
Thank you. But I think you're correct. And that's what I always say every single time I see you. That's what I like to bring you up here. Because, guys, if you don't know trading tuition, he does the most amazing minimal analysis and plays out like perfectly, right? So I'm the other opposite, right? I like the nitty gritty, I like the spaghetti. I don't know why. So I'm trying to find my own balance here by learning also from the simplistic side that trade tuition. So I'm going to do that once again because you are completely correct, and complicated is not the way, right? Simple usually is the way. So basically, when we have multiple divergence, we're just going to be looking for where the confluence point is. How do we find confluence? Just turning on your indicators and seeing where they are bunching up, right? At this point, they're bunching up either here or here. All right. The next thing I'm going to be looking for, it is a divergence equals drop, right? If the divergence are at the top, or it is like that, or range, right? So either of those will be a correction. So right now I have divergence. I'm looking for first either a drop or a range. And my only point of confluence will be dynamic reactor coming in strong. If the range happens, I will be looking for dynamic reactor to bounce or to ding or to swing at the price action to launch it for a continuation. This is in Spanish because I haven't read this in English. This is a a flat pause of continuation. That's I don't know if you guys know about this in English, but in Spanish it is a fat pause of continuation. But yeah, was that better?
Oh yeah, that's much easier.
Perfect. All right. Let me just keep going for a little bit here. I promise I'm not going to be taking that much. I want to revisit the Wyckoff part of my analysis that we looked at yesterday. This is part of the analysis that we were talking about yesterday. And I was telling you guys, you know what? At this point, I just don't see a possible a Wyckoff pattern, right? At this point, yesterday, I see a triangle, right? What it is about the triangle, it is that it is an unknown 50-50% breakout because this is a symmetrical triangle. So look at what we have just now, a breakout, but also we are on rejection area. So are you looking to enter for a short? At this point on the 4 hours, I would wait. This is not the moment. Let's just maybe take a look at something like the 15 minutes, right? Let me just double click here. I know it's a little bit spaghetti-ish, so bear here with me. I promise I'll try to move quick. Let's go. And I need my oscillator because I don't know why I cannot trade without it. All right, perfect. We're pushing upwards, right? Yes, we are having teasing to break out here, but all of the action till here, it's being to the upside. So we do have that momentum to keep pushing upwards. Not only that, we are going into the green. Going into the green and still being here, for me, that means that we have a higher, not 100%, but a higher, let's just say 60, right? And I'm guessing at this point, 60% to break through that range to the upside for a continuation. Nonetheless, nonetheless, we are in a resistance. Guys, do we long resistances or what do we do on resistances? Right?
FOMO in at the top.
Exactly. We FOMO it at the top. We become liquidity from someone else, right? Not that's a joke. Just making sure. So absolutely. So what would well then OC, what the hell, man, right? Are you telling me that we have 60% chances of playing it out? But again, it's at resistance. What do you mean? How do I make money on this? Well, it's gonna be very easy. We just wait, right? And what were we waiting for? Breakout retest, support, and continuation, right? So that's why I drew this line right now. If we're breaking in here, this also, despite this is a resistance area, it can become support area. As we break down, retest, find flip of the ribbon, and when you are somewhere, let me point it out, somewhere around here on your oscillator, right? At this point, we're not looking at right at the bottom. All right, we're looking at confirmation right around here on your oscillator, and you're already seeing the price action being somewhere around here. Remember what Alex mentioned yesterday. Where do you add, Alex?
Where do you add?
Yeah, when you have a you your yesterday was mentioning you
You,
have a long open, right? We're going for a flat positive continuation, and you don't add at the
you
resistance,
wait
but
for
you
the
add
bounce and you
exact
add at the bounce.
exactly.
Yeah. You
So
don't
you add at the
add
bounce. Yep.
at support.
Yes, exactly. Add support. So I usually wait just a little bit more, like there, right? Let me point it out, just so there's no question about it. Here, once I already seen one or two candles playing out to the upside, very important, very, very important. Remember that this other line in here, this other line, it is again acting as a resistance because we're not out of the blue. But at least you're entering on that 60% chance already with the bounce in, all right? And your flip of the ribbon in. So that is the plan so far. But remember, longing at the top, even with the bounce, that is very dangerous. What is your entry point? Your entry point are low points. Here, 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 here. Guess where at, right? Right here. So if you see us reverting, going back down, you're going to be looking at the price action hitting here, and then you look at some confirmation. What is your confirmation? What is your oscillator doing, right? How is your money flow doing? Like, for example, here you want to see money flow being the green, right? Bullish divergence, maybe still. Maybe you also want to see the bright red already in here, like something like that. This bright red, but somewhere around here. Why? Because bright red usually indicates that we are either at the lowest or very close to the lowest. Do you see that? Like this, for example, bright green, very close to the lowest, right? So that's what you start looking for, right? Leading indicators or things that you already know how they're going to be playing out, right? For example, and just as an example of it, it is your ribbon. If your ribbon is all the way down here, where else is it going to be going? There's no more room to keep going down, right? So what you do, you see, oh, how close am I to the bottom? Fairly close, right? All right, where's gonna be maybe my entry? Long point, maybe longing here, setting below the previous low, aiming at the point of here. Am I at one, at least at over 1%? Yes. There you go, and you enter. Did it have a little bit sweet of the lows? Yes, that's normal. And what happened to your oscillator? Stop moving upwards, right? So those are the things that you start looking for when you start hitting those support areas. All right, enough with my 15 minutes entries here. Let me just drop it down and also ask you guys, what do you guys have on your mind? Alex, macro movements, trade intuition, macro movements. What do you think? What do you guys think we have for this upcoming week?
We're going to the moon.
Are we going to the moon?
Can you say that last part again?
Oh, yeah. What do you think that we have for this upcoming week? Are we going to be breaking up? Are we going to be maybe ranging? I mean, the same question that yesterday, but maybe with a little bit more information right now on the charts.
Um, I really want to see a higher high so that everybody can get super bullish, and then of course start FOMOing, and then finally get the nice retrace that I've been wanting for a long time, and then it resets everything, and then moon mission after that. That's what I would love to see.
Oh, yes, so do I.
Yeah, I'm still in that class. Like I think I explained this yesterday and we talked about this too. Um, let me just hide this for a second here. What I want to see is the same thing as we were talking about this the other day. Is I want to see this high mitigated, so something up here blow off top, right? Bearish divergence coming back down, grabbing the lows, and then we go. Just cleaning all this shit out. Uh, and this isn't necessarily like gonna happen. All I know is that we don't want to be buying this thing. Okay, we want to be trying to get in, with good risk management. Like I said, cheap, cheap, cheap. Um, but going back to what trade intuition was talking about, just my little thing on divergences. So if you want the preschool version, bro, I'm all about the preschool version. That's me, man, to a T. So whenever I see a divergence, I've marked them out here. It's always time frame relevant. So you guys know me. I'm in on the 3 minute, the 5 minute, right? So a 15-minute divergence is strong for me. Okay, for me. Maybe you're trading on the 1 hour, but you're using the 4 hour. So your 1 hour is your kind of your entry, your 1 hour, your 30 minute, and then your 4 hours, your confirmation or whatever. So it's all fractal, it's all relevant. For me, it's where the divergence starts. I'm looking to come back. It's look left confluence. Okay, so if I look left confluence at all of these, right? Where did the divergence start? Here, right? Here, okay, here. Now, if I put a vertical line in red, oops, that was a Alt V. Oh, Control Z. There it is. Sorry. Um, if I put a vertical line in red, and we look left confluence, right? Look left confluence and look left confluence. Okay, wherever this high is where I'm looking for the price to return to. That's as basic as I keep it. So it started here, right? Here's your entry. This is your confluence, right? You're looking to come back to that. You're looking to at least come back to that. You're looking to at least come back to that. Okay. This one here, you're looking to at least come back to that. Okay. And it seems to work out pretty well for me. This could be your take profit one, right? Maybe you want to try and get that swing trade going, right? But if you look at this vertical line here, right, that's your high of this thing. Look left confluence right here. That's your vertical here. You look left confluence, right? Look left confluence, and you're looking to just come back to return. And that's a lot of market structure as well. I think that's pretty well how they behave. And also with it's very important to prioritize um trend. Okay, so when looking at trend, like if we're on a 5 minute and we're looking at bear divs, and we can go out and mark out bear divs and go through that as well. Let it populate here, and you can see like you're getting bear div, bear div, bear div, bear div, bear div, right? This is in an uptrend. Okay, so this necessarily isn't something you're looking to trade. What you The difference, in my opinion, with a bear div in a bullish trend, and it works the same for a bull div in a bearish trend, is where are you in the chart? Okay, are you up at the highs? Are you up in here? Right? Are you trading up in here? Because a bear div at the tops is a lot more lucrative, in my opinion, to come back down to at least the trend. Okay, so if you're trading anything like a dynamic reactor and you have that on, and let's say it's coming in here and it's swirling, there's your dynamic reactor. It gives me a lot more space instead of getting short here into that uptrend. Getting short at the highs, gives me that opportunity for a more lucrative trade in an opposing trend. Right? In this case, we're in an uptrend. So that's kind of how I keep it very simple. And you guys know me, I'm in and out of trades all day, right? So even yesterday, when I gave the long to the guys in the meeting, right? This is a hidden bullish divergence on the 15 over here, right here, but it's also a bull div on the 5 minute, right? So I have confluence on the 15 that this is a hidden bull div, and this is also a bull div at a key area. Okay, order block, support zone, trend line, three confluences all pointing here, and a divergence. Of course, I'm gonna press buy. Put my stop a little bit under here. Very cheap trade, and look at the money made. Right, so it's seeing it as well. Okay, so what do I mean by seeing it? This is 2 o'clock. Okay, this is 2 o'clock in the afternoon. We get our biggest volume from, let's say, 9 o'clock to about 11 o'clock. Then Wall Street goes on lunch. Okay, they go on lunch. Look at the volume, right? Look at the spike in volume we get in this little spot here. Look at this spike. This is this is lower than this, right? This is lower than this. This is lower than this, right? We get a spike. This turns up all of a sudden, okay? Volume, and you'll be able to see this in candles, okay? You'll be able to see this in candles eventually, but volume creates divergences, in my opinion. Institutional money playing games with us. What we have is when we have, I always talk about this, trickle down price action to a pushback to a sweep of the lows. This takes time. This happens quickly. Divergence, always, always. Or you get a sweep down, you get a crawl back up, and a crawl back down. Divergence, okay? Because this happens so quick, this happens slow. This happens slow, this happens quick. Okay. And you'll be able to see that. You can go and back test it. And that's what creates beautiful divergences that allows you to get in. Okay. That allows you to get in. You see the spike in volumes, and that will give you confluence to all of these moves, right? You see this one in here. Look at this price coming up, price coming up, price coming up. Slow. This is painful. Everybody FOMOing in this morning, FOMOing in. Ooh, let's send it. There's your sweep. Look at the volume candle right here, right? Volume candle sweep. There's your warning sign, and there's your dump on everyone's head. Divergence. Okay, it's right there. It happens all the time. I don't even trade with this on because I can visually, if I'm focused and I'm trading, right, I can see this candle come into play because you'll see the candle go like this. Like it's visually, you'll be able to see that candle. You should be able to see when volume comes in. You turn it on though and practice, right? So you see buyers coming in here, volume spiked right on this candle here, right? At a key level of support. But we also see that volume spiked up at these highs here, coming down, grabbing liquidity, short opportunity, right? Uptrend, but short opportunity. Quick spike, bearish divergence. Up at the highs, higher probability of coming back down. Okay? So these are the things that you're going to look for. And if you want the stronger ones, if you're trading on the 5 minute, look for the ones on the 15 minute. If you're trading on the 30 minute, look for the divergences on the 1 hour. And I do believe those will be stronger. And you're looking to just jump on trend and take advantage. And that's literally how I trade them. That's enough out of me.
Such a masterclass.
Very cool. And
S-
yeah, that's great stuff. And these are recorded, right?
Yes, these are being recorded.
Okay. Awesome.
Yeah. By the way, guys, let me just give you here class recordings.
Oh, you want to see how to use a trend based fib?
Let's do it. Why not?
Okay. Trend based fib. So So like how did we know that price was going to come up to 80, 85,000, right? You can go trend based fib is you just want a significant low and a significant high. Okay? So obviously uptrend, so we're going from low to high to low. Okay? So where did this consolidation right in here, where did this bottom out? That would be here. Very simple, right? Where did it change trend direction? Very simple, right here, right? That's when we made our higher high, our first higher high ever since this downwards trend. So you got to be able to identify these things. So I'm going to pull from here to here, and then your next significant low, right? So I would pull from this low to this high to this low, okay? And this will give you projections, right? You're looking at your 1618. That gave us basically our top here, okay? Looking for us to come up to key levels, right? So that's how I was really able to mark out, levels above us before we even got there, right? And these are just extension levels. Also, you want to see confluence. So if I'm pulling, forget about the price action all over here. Forget about all this stuff over here. You only have this price action right here. Okay? All of this is invisible to you. As soon as you see, look, we hit the 1618 extension level, we hit the 786 extension level. You want to see confluence, okay? This is calling a high. This is calling a high. This is calling your 1-to-1. Look how we paused out here, your 1-to-1, okay? And look how we hit here. So this, when you start to see confluence in the trend, then you can say that, hey man, I might want to go and mark out my 2618, my 3618. And these are all areas that if I'm in a long, that I'm looking to front run to take profits or any of my trades, or I'm looking for price to react at them. Okay. And you can do this with all of your altcoins, especially for taking profits in a bull run, right? I have done this with all of my tokens, and you can get like very macro with this. Okay. So if I'm looking at this whole thing, right, I can do this all the way from the bottom where I'm able to take, the trend based fib from the lows of the bear market all the way to the height of this one here to the low of this one here. And look at this. Look, we're banging on our 94,000, just coming up to that, our 786. Look at how they all match up, right? Our 618. So 143,000 might be your top, right? This would be an area that I'm looking for. And you can do this throughout, but you want to see confluence. That's like the most important thing. So if you're taking it from lower, right? If I'm taking this from lower and I want to project further out, let's say I go from low to high to low, same thing, right? Did we stop at the two? Yes, perfect. Look at it. It called that top perfectly. Look at that, right? So that's confluence. Look, the 1618, it caught where it consolidated, right? That's confluence. So this has shown me that it's a bit trustworthy, right? I don't want to take something where this thing's here and everything is missing. Okay, you're in the middle of a candle here, you're not catching the top here. You want to see confluence within it, right? So this one's hit quite nicely. The top here, it called the consolidation here, right? Look at that. You're three perfect top. Okay, so there's confluence in this, so I can mark out these levels in confidence to know that, hey man, we're probably that $100,000 levels looking pretty juicy right now for a full 4618 extension level, right? I always suggest you prioritize your 618s and your whole numbers. The 272, I should actually remove them. I don't use the 272s that much, but your whole numbers and your 618s. And you can use this on any time frame. You can use this on this trend base right now, where we're at right now. So you just find significant lows, significant highs. This is becoming messy. Let me get rid of all this. Becoming an OC chart, man. Uh, all right. So you can go and you want to go significant low, right? So significant low right here to significant high right here to significant low, right? And this will tell you that, hey, man, we're looking for an extension level to come up to 96,000 would be a target for this move, right? That's our first one. 99,000, 100K. A lot of things are pointing to that 100K. Makes sense, doesn't it? Right? So these are how you set out targets to kind of, get your crystal ball out and take a look at the future, man. That's it.
Perfect. So we still have 10 minutes to go. Guys, would you like to ask for go in any depth on something else before we start wrapping things up? If you have any questions, if you want to take a look at any other altcoins, we'll be more than happy to. Please let us know right here on the side chat. Country, what's up? Crypto Pollo, what's up? I see you guys typing. Let's see what do we got here. Good information, Alex says. So Alex Country says good information. Block group H bar. Oh, nice one. All right, H bar. So let's take a look at that. By the way, guys, I know H bar right now already has exploded. So just be careful there because when we're chasing after whatever have already moved, it's not the plan, right? I'm gonna do H bar and then I'm gonna follow up on that one on what I just said. So let's go to H bar here and show you how do I search for coins that haven't moved just yet. All right, HBAR had a fantastic movement to the upside, guys. Something important, and let me just start here. It is going to a higher time frame, 4 hour daily stuff like that, and start looking for those areas where basically the price action has not fallen from. All right, that's where you start looking for allocation. Then this is for the long term scenario. This is where you start allocation and then you hold it for those movements. It is important for you to believe in the coin and you are willing to hold it for at least one more cycle, just in case you are down with, I mean, it doesn't go up this cycle, right? H bar did went up. Also, another way to start looking for those movements will be breakout retest of though of the dynamic reactor, right? So breakout, retest, a little bit of a range. Here we go. We are still above the zero line. Looking at how many divergences we have, right? We went back for the flip of the ribbon, and then you have your first movement and then your second movement. Let's take a look at right now what we have at this point. Right now at this point, we have a little bit of a bull flag here formation. Let's go to the 15 minutes because we did an analysis a little bit before, which was I think 2 days ago, Friday or Monday. I don't quite remember. The point in here, I was looking for waiting for either retracement or ranging up here, right? After we have that, well then what we look for is sweep of the lows. Where is our sweep of the lows? Right here, why on previous highs and also on support areas. Let me bring them up. We used to have, there we go. We used to have right there, or we still have right there, a blue line of a predictive range. Also remember that the most important range, or the two most important lines, are the golden lines on predictive ranges. So what you do, you look for your area of entry, and look at that. It actually played out exactly on the oscillator as we predicted, right? So going down, right? So going down, and then guess what? Looking for, oh, come on. Looking for that flip of the ribbon, right? So that flip of the ribbon played out a little bit lower here, not because remember we have two possible possibilities for those flip of the ribbon. Flip of the ribbon at the zero line, right? Or flip of the ribbon lower down here. So it played out lower. That we start looking on the flip of the ribbon one candle after. So somewhere around here, you start looking for support. We already almost hit support. We're on entry zones, and you can either enter on this candle, on the breakout, retest on this candle, and off you go. All right. So basically, played out perfectly. Did I trade it? Trade it? No, I did not set my alert. So too bad. I need to start setting up my alerts at this point. Let's take a look at the 15 minutes what we got here. We do see a little bit of a trend line here coming in down here. Also, we have a big support area right here, fairly flat. Usually, if you look at triangle pattern descriptions or pattern theory, usually, not all the time, usually when we have a triangle with a flat base or flat top, we break to the flat line. So guess what we're having here? So lower highs, right? Same lows. Where is the flat area? Right down here. And what also leads my theory? Well, it's not my theory, but my analysis, it is that we already are below the zero line, and seems like we want to make a flip of the ribbon here. So basically a rejection. Last time we have a rejection like that. Let's just see what happened in here. As you can see, I haven't looked at the price action. Let's just see it. Here we go. And what happened? On that rejection at the top, well, then we have a further continuation to the downside. Then what else? We have a higher low and flip of the ribbon and also a sweep of the lows. This creates the divergence. We have the divergence and then off we go. So far, step by step, right now, we could be having a breakout to the downside. You could also be turning on your indicators in here and see and look for your confluence zone. So far, your first confluence zone, it is right here. So this means that we have the dynamic reactor coming in strong. Not only dynamic reactor, we also have volume flex reactor, and also we have the newest, let me show you here, the quantum reactor. All of the reactors are in the same zone, which leads me to believe, right, that despite we could be flipping down, we could be not once or again, like we did had in the past, a flip up early, create a sweep of the lows, right? And then a higher low, and basically then a push up. This could be your entry as long as we are breaking through the zero line. I want to see a break through the zero line in here and also a break through this area here before I start entering for the next H bar long. But so far, my prediction is bearish. That's it. Why? Because of the pattern and because we are below the zero line. So far, right now, at this instant, at this minute, my prediction is bearish. Next, if we, I mean, further down the day, if we see a bouncing here and we see this other flip of the ribbon, I will be turning bullish, right? And that will be my first possible entry as long as I see the flip of the ribbon and the ribbon breaking through the zero line. Let me just finish up here with another thing, which is the crypto bubbles. Let me bring them up here. This is what I look for. All right. So, guys, if you're looking at H bar, most likely you either are you like the coin, or you're trying to catch the movement that already happened. All right. If you are on the second part, which is trying to catch the movement because you think that could have another explosive movement like before, your chances of having or catching that secondary movements are lower at this point, right? I'm not saying they're impossible. I'm not saying that you cannot make it. The only thing I'm saying is that the chances are lower. So, what would be my recommendation? So, classify H bar. Go and look at the news. What did or what made H bar explode? For example, let me give you guys an example right here. Um, let's just talk about I don't know, AI, right? AI coin, it's AI, it's an AI coin, right? So let's just say that maybe Google invested X amount of millions on AI, therefore AI coin had something to do there and exploded. Well, then what do you do to catch maybe that next movement? Well, go into another AI coins and look for the ones that maybe have a participation and haven't moved, right? And then you start allocating there. So narrative will then drive those coins. The next thing that I'm going to be looking at, it is projects that I like, right? I don't know, something that has been around for a couple of years, or a meme coin. Meme coins, there's a caveat there. Remember, it's a meme coin, it's not an investment, all right? It's kind of like a gambling. So just bear that in mind, all right? And then what I want to see, it is a contraction from the weekly to the daily. All right. For example, here we go. What was this one? Hydra, right? I see that contraction. So if it's already contracted, maybe it means that it went down. If it went down, maybe I can catch the bounce to the upside. All right. So let's just take a look at it really quick. Can you trade it? Yes, you can trade it. Hydra. Just copy this. Let's go here. Let's go Hydra. Add it here. Oh no, H bar. What? Hedera. What is Hedera? Come on. Am I doing something wrong here?
You're too beautiful. H bar, HBAR.
But it's not H bar. It is Hed Hedera. Oh, it's H bar. Fuck me. We already have the sorry for that. I knew myself. All right, let's look for something else. Like for example, dot. I think dot went from weekly big, right, or XRP to daily small, right? So dot or XRP. Yeah, that was my bad. Sorry for that. So let's do. What do you rather trade, dot or XRP, Alex? None. Right?
Fuck. We no we traded dot on the weekend, man. Kyle from our Discord gave an amazing trade setup, man. It was crazy. I made so much money on dot on the weekend.
Nice. That's amazing. So let's take a look at dot then. All right. So we went from weekly high. Where is dot? Here we go. To daily low, right? So let's take a that means a pump and dump. So let's go to dot, and we can see that pump and dump. And guess where we are right now? On support. So is this a good area to enter? We're at support, but we're still below the zero line. What we want to see is flip of the ribbon and break to the zero line. So what you do is you set your alert either here or here, right? And also remember, this is a late entry, but remember that we want to enter on support areas. So where do we have another support? Well, then we have all of these areas of support, maybe also this purple line. So I will be setting my alert somewhere around here, and also because I have this previous low, right? So at this point, whatever happens with dot, right? If it breaks out, I'm gonna go enter for the retest, and off we go. If it goes and do a sweep of the lows, I'm gonna be waiting for the flip of the ribbon to enter somewhere around here as we break back above the zero, the dynamic reactor, and also we are above of the zero lining here. So this is how I hunt for those big movements. All right, I don't chase after coins that already have moved unless we have a narrative behind it. So it's a little bit of pass the time. Alex, do you have another compromise today, or
I'm always busy. I got to go set up this TV now, but I think we're gonna have a meeting later too. So I'm gonna
absolutely
go set
yes?
up the TV,
Mhm.
and then maybe we you just message me and we can figure out a time to have a meeting.
Absolutely. Alex will be ready for the meeting in 1 hour from now, 45 minutes to 1 hour from now, just in case you are able to.
So okay, so in an hour. So okay, no problem. Let's do it.
All right, perfect. Guys, thank you so much for joining. Alex, what a class, my friend. Thank you so much for spreading that knowledge. I really, really enjoyed it. Guys, also thank you so much for joining and asking the questions. Remember that this is the most important part. Special thanks to Crypto Pollo and also Trade, sorry, not Trade, but Trading Tuition. Also, Veterans, a little fee.